GM, we are live. GM, everyone, we are back with another weekly recap. Joined, of course, by our senior journalist, Finn, and Mr. Thomas Bahamas. We're going to break down all the top stories from across the Solana ecosystem that are shaping the Solana landscape as we know it. So, Finn, GM, how are we doing, sir?
Very good. Thank you, Jack. GM, how are we doing?
GM, absolutely great week ahead of us. I'm sure after everything that we've seen over the last sort of 5 days, the ups, the downs, the insider trading. So surely next week is going to be better at least than today. We're seeing another sea of red. Mr. Thomas Bahamas, how are you doing, sir?
GM, I'm doing great. You know, the sun's out. It's Friday morning. The charts are red. What else could you ask for?
Exactly as predicted. I feel like every Friday now has a way of surprising us. But let's slide right into a little update before we open Finn's juicy, spicy, delicious newsletter and share the top stories with you guys. Now, price-wise, we were trading at around $90. We peaked at about 96, which was great about 10 days ago. Since then, we have dipped. We are down on the week. Sol is now trading between $84 and $85. Not great, but if you sort of zoom out and you think about the last 3 months, we are still very much in that consolidation period, sideways chop since the February 2 lows. So nothing too surprising there. I suppose there was a bit of a jump out of the extreme fear territory. If you look over at the fear and greed index, that was looking good for a while. We are down in fear, not quite extreme fear, but right on the cusp of it. So markets are very cautious at the moment, to say the least. BTC, as you know, about 10 days ago, also touched 76K. We are now back down to well under 70 at the moment. So yeah, markets are pricing in uncertainty. But if you're wondering about why that's happening, one of the many factors influencing that is likely going to be David Sachs, who was the AI and crypto czar in the White House. He has left. It is largely to do with the fact that he is now at the end of his 130-day term limit. The issue for us, though, is that the Clarity Act, market structure bill, still somewhat unresolved. A bit of a problem for us. I would say it's a big problem for us, actually. Because we need the Clarity Act to pass before the midterms. Otherwise, as you know, it remains something that is reversible by the next administration. Many experts that have spoken to us at SolanaFloor have mentioned how important clarity is, how important it is to get it done this year. Otherwise, in a sort of nightmare scenario, we could see all of that regulatory progress get reversed. Bo Hines was another one of these crypto champions, if you will, that was working closely with the president. He was an advisor. He also left last year. So that was another bit of a blow as far as crypto champions go. Senator Loomis, who you've probably heard of, is one of those sort of names that champions crypto and the regulatory fight that we're putting on. She has warned that if we don't get this done in 2026 with the Clarity Act, that we might only get a second chance in 2030. So that makes things a little bit bleak when you think about the next 4 years, but we have basically from now until November to track the progress with the Clarity Act, and we'll be paying very close attention to that. We did recently release some videos, so go and check those out if you want to learn more. But to make things even more confusing and uncertain, Coinbase's Brian Armstrong, another champion who's been sort of fighting the battle over in Washington, D.C., is now withholding support, you could say, for the stablecoin yield debate. He says, it needs to remain unresolved until banks let us have what we want, which is full autonomy, full control over who we pay yields to. As you probably know by now, stable coin yields are blocked if it's passive yield. So you can't just hold USDC in an account somewhere and expect to get paid for it. That's not going to happen. You have to be an active user. But luckily for us, there are ways of enabling that. You can basically just stake your stable coins, and depending on the terms, you will get paid yield. So progress has been made. Not everyone is very happy about it. But again, we have deep dives on SolanaFloor, so you can check out our YouTube channel if you want to learn more about that. But zooming out for a quick second here, there is some good news. I guess it's sort of shrouded in mystery and calls for insider trading. But we do have a potential pause on the strikes in Iran and the Middle East at the moment. So that's providing some brief breathing room, if you will, a bit of a relief moment as far as geopolitical risk goes. But that risk premium is still very active, as you can see from oil prices, still trading very much in the sort of dangerously high territory. And if we do, as sort of doomsday scenarios go, if we do reach $150 for any prolonged period, as far as oil price goes, then we could be unfortunately looking at a global meltdown. Fingers crossed the war ends very soon and we don't have that scenario playing out. As we know, President Trump likes to make some big moves over the weekend when markets are closed. So one of the facts, one of the developments that people are watching at the moment, with it being a Friday, is whether or not the White House is going to sanction any strikes. Over the weekend, people are saying there are troops on the way to the Middle East again. We hope that doesn't happen, but if it does, you can expect to see on-chain commodities spike in volume because markets are closed, and that's pretty much the only place you can trade over the weekend. So, in other news, I want to talk about something good, positive, happy, optimistic. And this was great. Put a massive smile on my face yesterday because, in my mind, the funniest dynamic duo in the Solana ecosystem back. They've reworked the Solana ecosystem calls as we know it. The Soul Brothers are back. Shout out to Eno. Shout out to Simon. Absolute banger episode yesterday. It was great. So make sure you're tuning into those Solana ecosystem calls. It's once a month. It's on a Thursday, and you get all the month's sort of big Solana wins across the ecosystem. And it's good and it's funny. It's banter. They had a very funny interview with SolanaFloor. It was filmed in Serbia, I think. So the guys, they're putting in the work. They're flying all the way around the world, and they're making this happen for all of us as a public good. So shout out to Eno, shout out to Simon. With all that said, Finn, I'm going to pull up your juicy newsletter. Bit of a confusing week as far as sentiment goes. We sort of covered some of the stories there that are impacting us as far as the macro landscape goes. But talk me through how you see it, and then let's dive into the way TB sees it as I pull up this newsletter, please.
Absolutely. So we've kind of got two ends of the spectrum here. On one hand, it's very, very exciting that we finally have an MCP proposal out from the team at Anza. This is directly one of the updates that everyone kind of unilaterally agrees is going to be extremely positive for Solana long term. So it's great to see that finally taking shape. At the other end of the spectrum, look, people are disappointed about their backpack airdrop. Circle has absolutely nuked 20% on the news of the Clarity Act and of the fact that Tether is finally getting an audit. So look, obviously it's great that Tether is getting an audit. That brings a lot of credibility to the space as a whole, but it definitely feels like a bear market news cycle between, you know, bad airdrops going out, Circle crashing 20%, and general. I don't want to say drama on the timeline, but a lot of miscommunication and a lot of people kind of asking about the implications of what this MCP proposal really looks like. Thomas, what's it like for you on the ground over in the US?
Yeah, you know, I don't know. Things are a little iffy out there, right? You know, there's no like big positive sentiment. Everyone's kind of on edge. The timelines are crazy. These headlines are insane. But you know, my favorite thing that's going on right now is like people are arguing about Solana again, right? Like there's like all these big proposals are happening. Everybody's got their opinion. And it's like one of the things that Solana's always done is kind of like leaned into this. It's like, hey, argue all you want, say what you want. And then in the end, we'll see what we can come up with that makes the most sense. So even though it's, you know, a bit of a bear market, it's like, I'm learning a ton about, you know, the different ways that people are trying to improve Solana. You know, that MCP was very interesting. Did I understand it right away? No. Am I going to learn every single part of it? Probably not, but I'm going to learn as much as I can about it and see like how it affects users. It seems positive in the long run. But yeah, there's a lot going on. What do you think, Jack?
There is a lot going on. It's confusing. I mean, just look at these thumbnails as well that Finn's generated over the week. People looking at charts, it's panicking. You've got so many different inputs that people have to process. This is a slightly technical story, I suppose, but at a very high level, it's important to mention that it impacts all of us quite seriously. So let's dive into story number one here. The headline is Solana community divided over Anza MCP proposal impact on validators and perps trading. Both validators and perps trading are issues that have been discussed in depth lately, to say the least. So Finn, take it away. Why have people been a little bit rattled by your headline, by your story? Let's dive into that, but also let's talk about why this really impacts all of us.
Right. So as mentioned at the top of the call here, MCP is arguably one of the biggest updates to come to the network in many years. I think I haven't seen people so excited about something since Firedancer came out and demoed 100 million TPS in 2022. Essentially, what it boils down to is that currently Solana operates under a single leader monopoly, which means that whoever is leading the blockchain at that time basically kind of has a full control and influence over what gets put into blocks, how they get processed, and essentially that gives them a lot of power over the network itself, and that power can be abused negatively. So MCP wants to separate that up. So instead of having one single leader, you have multiple concurrent proposers all working at the same time, and essentially it helps us with decentralization. It is believed to make the chain faster. It's going to bring that economic tick cycle down to 50 milliseconds. And it means that censorship becomes cryptographically enforceable instead of just policy-based. So this is a protocol level update that most people would agree helps the network long term. It's considered an extremely bullish thing by many intelligent people. And while everyone directionally agrees that it's the best move forward, there has been some questions around the implementation of Anza's proposal itself, that it might negatively impact validator economics. And it's hard to know how deep that impact is going to be. I think it's still very fresh. I think a lot of people haven't had the time to dive into this white paper and really make sense of the downstream effects of everything. When I glanced over, I sent out a few messages to ecosystem teams trying to figure out what this is going to mean for validators, and nobody was really able to give me a concrete answer. There was a tweet somewhere out there in the article from Eli Getter, who is the Solana Foundation head of ecosystem engineering, and he believes that there could be some short-term revenue losses for validators. Totally hit back at him and said that that's not true. There's no basis for that at all. So in true Solana fashion, we have people from all over the ecosystem arguing over whether the effects are going to be true or not. There's another argument that MCP is going to be a big boon for Perps on the network. Obviously, we've discussed at length about how Solana is poorly equipped for Perps at this moment. Whether MCP solves that or whether that's just another step in the right direction remains to be seen. There's a lot of off-chain solutions coming through from teams like Bulk and Bullet that are supposedly going to do great things and bring us a competitive Perps DEX as well. I'm really looking forward to seeing how that can compete against on-chain solutions. Not on-chain, but directly on the layer one. So yeah, a lot going on in this MCP proposal. A lot of mixed messages, a lot of people think that Anza is downplaying the impact on validator economics. So there's going to be some great content coming out probably in the next week or two based on whether the validators are actually going to suffer under this. Thomas, you've been looking a bit more into Perps recently. What's your take here?
Yeah, I mean, it's the most exciting space that everybody's talking about right now, right? And Solana has had like technical limitations leading up to this. So right now, people are trying to build, like you said, off-chain solutions, L2s, rollups, sidecars, whatever you want to call it, in order to make sure that, technically Solana is there. I think that with all of these proposals, I think the end winner of all of this is going to be the users, right? I think that we're going to get to something that is really good. I think that we can definitely be competitive on Perps. Obviously, Hyperliquid's got a pretty big head start at this point, but Solana has the users already, right? So I think that it would be a natural place for them to have, a lot of liquidity, a lot of users. So I'm excited about that. And I mean, this is just like technically a pretty important and like pretty novel technology, right? Like I don't think there's any other blockchains that have this going for it live, right? So for Solana to go after that's big, and 50 millisecond blocks is pretty huge, right?
Yeah, and I do want to jump in here because I caught a bit of flack for the subheading here, Anza forced into action by Foundation members Perps essay. Obviously, this proposal has been in the works for a very long time. It is not because Chase Barker published a Perps essay that Anza dropped this in the following hours. This is a very simple subheading to draw the attention, and then answering it with a very obvious answer in the first line. So I'm very excited to see how the discussion around MCP shapes up in the coming weeks, because as I said, it's still very early days. I think a lot of people haven't had the time to digest this properly, and with more eyes and with more time, we are going to get more information on what this is going to mean downstream. Jack, what's your read on the MCP situation here?
Yeah, well, I wanted to touch on one of the sub topics here, which is the MEV and collusion discussion that's been sort of making the rounds in the last 48 hours. We saw one of the speakers at the Digital Asset Summit in New York. A clip was put out, and he's basically saying, look, MEV has no place in financial markets. And he's ruffled a lot of feathers, arguably a lot more than you did with your headline and your subheading, Finn. Chase quote tweeted it, saying retard, rightly so. People like Melton, Kyle Samani, Merritt, a whole host of commentators came out and said, look, you simply don't understand what you're talking about. So suffice to say, it's a hot topic at the moment. arguing that MEV is something that can happen on Ethereum, it can happen on Solana, but it has no place in financial markets. It seems to have ruffled a lot better. So whether you're approaching this from the technical side, the underlying technology, or as a trader, as an investor, as a user of Solana or Ethereum, you're going to be talking about this for the foreseeable future. You're going to be hearing about this for the foreseeable future. But back to the story here. Finn, I think part of the frustration that people have voiced is also an apparent discrepancy between what Chase was saying and what Tolly was saying. Tolly's basically arguing there's going to be no impact or little to no impact. And correct me if I'm wrong here, while Chase is basically saying, there could be some short-term revenue hits. So is that sort of the crux of the issue, why people are frustrated?
I don't think it's a question of frustration. I think it's more a question that people aren't quite sure what to think yet. Again, people directly, generally, the consensus is that MCP is a net positive. I think this is the first implementation that we've actually seen. I know that there was a lot of drafts that got passed around before this one actually went live. There is going to be a SIMD coming out for this, I believe, in the coming months, where everyone's going to vote on whether they want to implement this or not. I suspect that probably passes. But again, in true Solana fashion, people are going to continue arguing over whether the network is actually properly equipped for Perps or whether it is not properly equipped for Perps as it stands right now. You can see there, Ben Coverston from Temporal, he says that a reliable competitive Perps desk should exist on Solana at the moment, and that we aren't really constrained as constrained as we believe at this stage. So look, we're going to see a lot come out probably in the next few weeks over the pros and cons of this proposal, and I'm very much looking forward to having some people who are a lot more intelligent than me break it down in ways that illuminate us all.
I'm sure people will be very, very vocal about this, as you mentioned. All right, let's switch over to story number 2 here, because it starts with a big red chart, and it's worth paying attention to. So it's about Backpack. Obviously, unless you're living under a rock, you've been seeing all the posts on the timeline. The headline here is Backpack's BP airdrop triggers mixed community response. I think that's a very, very neutral way of talking, Finn. I guess you got shouted at enough for the previous headline that you decided to go a little bit calmer on this one. But context here, Backpack launched their BP token on March 23rd, so just 4 days ago, basically. On paper, tokenomics were good. Everything was okay. 25% of supply was going to go entirely to users. But then the community is not necessarily happy. So Finn, talk me through this chart. Why are the people angry?
Right, so this story actually came from Pablo over in the SolanaFloor newsroom. So well done, Pablo, for throwing this one together. Yep, as it stands, Backpack has finally launched its token after many years, it feels like, of points campaigns. As is often the case, the token from which there is a large airdrop doesn't perform that well in its first week. Most people are angry because they've been holding on to these Mad Lads NFTs for what looks like years. I mean, if you look at that chart there, you can see that these were once worth around 20K, 15K, and those have steadily bled out as part of a wider NFT correction. NFTs have really been struggling for a very, very long time. And after all these years of holding, after all these years of pledging their loyalty to Backpack, a lot of these Mad Lads holders have been given around $200 worth of coins. So naturally, very, very frustrated. But I think it is also worth mentioning that Mad Lads NFT holders have eaten pretty well in the past. They got very good airdrops for Pith and Dim as well, I believe, in the past. So, this isn't the be all and end all of the value they've been given. But look, people are upset. People feel like they've been taken advantage of. A lot of traders were, to their view, they were wrongly registered as Sybil wallets. And then they didn't get any allocation at all. So look, people are very pissed off. People are coming after Armani with all kinds of nasty comments. And generally, it's not looking that great for Backpack at the moment. Volume on the exchange, I think, is about 15 million at the moment, and most of that's coming from the BP token itself. Without BP volume, they're doing about 9 million, I believe, in daily volume. That might have lifted up since then. So look, it's the first week after a token launch is always tough. There's always going to be people complaining about all kinds of shenanigans. Thomas, you're here with a Focket t-shirt, so I want to have your take on this. Do you think that the commentary towards Backpack is unfair?
I don't think it's unfair, right? Like, I should premise this with, I'm an Armani fan, right? I feel like he's got like a fantastic hero's journey. Mad Lads were the #1 NFT and probably still are, even though the price has gone down quite a bit. But if you look at it at its entirety, right? Like these launched at $150. It was like 6.9 SOL in 2023. So, they're up money since then. But, over the time, over these 3 years, the price has gone up insanely. Like at one point they were trading for $20,000 per NFT. You got multiple airdrops if you did hold them. The kind of the side of this that is tough to kind of like reconcile is the whole time that you were holding one of these NFTs, you were probably staking it and getting like points, and there was like gold coins on there if you held it for longer, and there was all these other things that they did. So for it to be a $200 airdrop in the end is kind of rough. But I mean, they also had the opportunity to make like what is that, 1000x? So there was a lot of opportunity there. I mean, Mad Lads have always been a pretty solid community. The NFTs are great. Like I said, I minted a couple. I am not holding them anymore. I did well on them. I don't know. I mean, I don't know what to expect with an NFT in 2026, right? Like NFTs are kind of dead, so I don't know what they could have done differently to make this work. Like, could Backpack as a business like make sense to airdrop thousands of dollars away to people that are likely just gonna dump it right away? I don't think so. Does a centralized exchange really excite me that much? No. Like I don't really use Backpack Exchange. Personally, like I try to not use centralized exchanges as much as possible, but the fact that he's built it and the fact that it's got a lot more security in there is good. So I don't know. I think all in all, it's like, it's not like the best outcome of an NFT project, but I don't really see it going any other way,
Yeah, I think the difficult thing with doing airdrops to NFTs and airdrops in general is that the idea of an airdrop is almost always going to be more profitable than the airdrop itself. You 9 times out of 10, you're going to win the trade if you just sell the speculation of the airdrop rather than waiting for the airdrop to be given. Every airdrop is a trade. This is something I've been saying for years now. You commit time, you commit capital, you suffer opportunity cost. If you lose that trade, you lose that trade. And that's generally, I find it hard to blame other people for that if that goes the wrong way.
Yeah, and I kind of hate that, right? Because like, I don't know, I get very excited about tokens. You farm the airdrops, you go after the tokens, and then you look at, historically, if you would have sold all these airdrops day one, that was the best move, which is just sad, right? Like I know that we're trying to change that and that everybody's trying to address that, but it's kind of the kind of what's been happening, right?
Yeah, and I believe they have a pretty creative token model as well. So from what I understand, 25% of the pie went directly to users. The investors got nothing right out the gate, and that I believe if Backpack holders stake these tokens for the space of a year, that actually gets converted into equity. So
Okay.
I think that's quite creative. There's been a lot of talk about the token equity divide and how resilient that is, and whether or not tokens are actually genuinely just magic internet money that have no value at all. So even if the token is performing badly out the gate, that's not to say that the model itself is flawed. So maybe in a year's time we'll need to revisit this and see if it was actually a good idea to offer this equity transition.
I just want to bring our attention to one thing. I'm going to put it back on screen here. We got a comment coming through. Degens get free stuff and it's never good enough. Is this just going to be a recurring theme for eternity? Is my question. Every airdrop I can think of, maybe with the exception of the original Jito and Bonk airdrops, where it just created massive euphoria, and that sort of euphoric reaction drowned out any negative reactions to it. I feel like there's always a significantly displeased portion of the public who seem to make a lot of noise. Is this just, are we doomed to always be dissatisfied with what we receive for free?
We're dissatisfied if our expectations are not met, and expectations are only there if we believe that we're putting in value to get something in return, which for me, that's the definition of trade. Bonk is a great example because I remember getting the Bonk airdrop and just waking up and seeing this random coin I'd never seen or heard of before in my wallet. I didn't know if it was a scam. I didn't know if it was, something that was legit in any sense of the word. I think I actually punted it all on Famous Fox raffle tickets. And ended up, losing out on that a lot. Look, yeah, I think it's not so much a question of degens getting stuff for free. I think every airdrop is a trade, and if you do genuinely get something for free, you're just happy that it's arrived. You're not feeling gutted about how much or how little you got.
Yeah, I think
Awesome.
the flip
Yeah.
side of that story is that airdrops and tokens and points programs are probably the best growth model we've ever seen, right? So the trade for all these protocols is, hey, like we're going to give away some of our token. In exchange for that, you have to farm our protocol. You have to use our protocol. We're going to give you access to it. And ideally, the protocol is so good that you use it when you don't get paid to use it, right? Is that are any of these protocols fulfilling that, or are they getting there? I think some of them probably have, but I think a lot of times people are just there for the money, and people complain about it. I myself am happy with any airdrop that comes my way.
I think that's the right attitude to have. I love Finn's take on this, which is that everything you do on chain is basically trade, airdrops, farming. These are no exception to that. So you're swapping something for something else. And I like TB's approach of the glass is always half full. Remains to be seen if people are going to be satisfied with upcoming airdrops, or if it's just not going to make enough of a dent in the damage that's already been done in the wake of October 10, the 10/10 deleveraging event that sort of left all of us broke and scratching our chins. So the next story here, it's an interesting one because it touches on many different angles that we've been covering at SolanaFloor. It's about the Clarity Act. It's about stable coins. It's about Circle and USDC's dominance. It's about Tether. And most importantly, it's about the entire industry's future because everything, as we talked about earlier, hangs in the balance between now and November. So let me scroll down a little bit here. The headline that we're looking at is Circle down 18% as Tether opens doors to auditors and Clarity vetoes passive yield. We touched on the passive yield angle there. You have to basically do something actively with your stable coins in order to receive yield. Detractors have come out and said, look, banks are just being greedy as usual. They not only want to protect their deposits, they also want to protect their very thin profit margins, which cumulatively, I think the top 10 banks alone in the US are responsible for $100 million of annual profits. So 100 billion, pardon. It's, make of that what you will. Interestingly, from my research, Circle stock price should have theoretically reacted positively to the Clarity development. But that's why there's two different angles here. The Tether door opening to big four audit firms could threaten their sort of the moat, if you will, the USP that Circle's long had of transparency, and Tether, pardon me, as you know, has not historically been a very transparent organization. So Finn, there's so many different angles here to break it down. Do you also get the sense that this 20% move to the downside ended up being 18% on the day? Was it a bit of an overreaction? Did markets maybe price it in incorrectly, or are they over-indexing on the fact that Tether is now going to get audited? What's the main reason why Circle dropped so sharply in such a short period of time?
My opinion is that the Circle drop is mostly due to the Tether audit, more so than the Clarity Act shenanigans. So we've seen a lot of this information actually came out earlier in the week regarding the Clarity Act. So Eleanor Terrett, who is a Crypto America host, published this earlier in the week and said that according to internal stakeholder emails, there's a bit of a split between what's considered active and passive yield strategies. The thing that the Clarity Act is really lobbying for at the moment is to veto passive strategies, so that you can't just hold your USDC in your exchange account or in your wallet and receive yield on that. If you're an active user, we're still not quite sure what the terminology on that is actually going to look like, but active users will not be disqualified from receiving yield, but also it needs to make sure that it's not economically or functionally equivalent to interest is the fine print there. So there's a lot of smoke and mirrors, I think, going on with the Clarity Act at the moment, and no one's really quite sure what to take of it. For that reason, I think that Circle's drop is much more closely linked to the Tether audit. People have for a long time lauded Tether's proof of reserves as this black swan waiting to happen. Tether is one of the biggest financial businesses in the world. They've got 550 million users, 184 billion assets worth in market cap, and there's been no transparency or accountability to that up until now. So if Tether goes through with this audit, It turns out that actually everything is completely copacetic. There's no shady business happening behind closed doors at Tether. That perhaps opens the door to a Tether IPO. And in that circumstance, that is when I think Circle might have a bit of a battle in the public markets for it, because as much as we all use USDC on Solana, Tether is actually still the kingpin. Tether is still the largest stablecoin by market cap. So look, at the moment, if you want to profit off the stablecoin trade, buying Circle is kind of the only way to do that. And if Tether then enters the market, all of a sudden you've got another competitor, and not just any competitor, but the leading provider for the stablecoin market. So look, there's definitely a lot going on. Circle took an absolute hit, down about 20% on the week. Look, Circle is still a great company. They're going to continue with their incredible business model. Circle stablecoins are going to continue to do well. Look, I think this is probably a bit of an overreaction, but we'll see what happens with time. Thomas, what are you thinking?
Yeah. So, all right, everybody's talking about this 20% drop in Circle, but if you expand that chart out a little bit, like it's up 2x in the last couple of months as well, right? So it's a volatile, it's a volatile stock, right? And like you said, it's probably one of the only ways right now to really profit off stablecoins. So, I think it's a good company. They've done fantastic things. Obviously, Clarity Act is kind of in limbo. You get news, positive news one day, negative news the next day. So, I don't know where that is going right now. It seems like a lot of people really want to get something passed. So I sure I'm hoping that it does. And I mean, Tether is just an absolute beast, right? Like we need to get these audits through. I think it's good for crypto in general if we do, verify everything that they had. I'm sure that they've had. I mean, Tether truthers have been around forever, right? And they've never gotten caught not having the funds, but they also had to like hide them from the governments as well, right? So it's kind of a mess, but it'd be nice to just kind of like put that to bed and not have to think about that again. With like the interest not being able to be paid, my mind immediately went to that DeFi platform Lulo, right? It like moves your stables around from one DeFi platform to the next. Probably not how it works, but that's just where my mind went. And I think in general, this is probably just like a speed bump for Circle, right? Like I don't own any, and I didn't really like research all the financials or anything, but in general, I would imagine that they're going to be a massive player in the stablecoin arena, right?
Definitely.
So they've ingrained themselves into Solana, they've ingrained themselves into Base. So I don't think they're going away, and I don't think anyone's really been tested as hard as them, except maybe Tether, right? Like they went through a lot through like the whole Gensler and Biden era, and they came out on top, right? Like they were the only coin really that you could guarantee to be able to off ramp, right? USDC to USD was through Coinbase, especially, was like the one venue that was always open for at least for Americans throughout, the whole like, I don't know, well, the whole anti-crypto army while they were reigning, right?
Yeah. Well, you mentioned there, it's probably just a speed bump for Circle, right? But I think if Tether had, not opened its doors up to auditors, then we would have sort of had a sword waiting there for us as an industry, not just Circle, but, all stable coins. People have long been talking about what happens if Tether implodes, what happens if, not just through political risk and regulators coming and cracking down on it, but what happens if there's protocol risk? In any case, Tether imploding, I think, would have been significant systemic risk for the entire industry. So maybe that plays into the overreaction that we're seeing in stock price. But as I think, as is written here, Circle has steadily eaten away at Tether's market share over the years. They are obviously the dominant stablecoin of choice on Solana. But if you zoom out and you look at the entirety of crypto, then Tether maintains their dominance over there. I just want to scroll back up to something here. This tweet from Nick Carter, going back to the Clarity yield discussion here. So moving away from Tether for just a second, he says it's bad. He says it's anti-consumer and it's a bank bailout. He says banks are rewarded for paying 0.4% on savings accounts. And essentially, he thinks that we're going to take a step back in time to the good old days of Gary Gensler's combative SEC regime. And he says stablecoin innovation is going to be forced offshore. and it's basically just going to be a halt. Bad for consumers, bad for startups, good for bank shareholders. I can't fault him for this, really. We've long been saying the whole reason why we have stable coins, the whole reason why crypto exists is because we want to be free of these big evil banks. Paraphrasing badly here, but it's highly frustrating, and I really understand why Coinbase and Brian Armstrong have taken a step back from being cooperative, and now they're saying we're just not going to support this. Meanwhile, Senator Loomis is coming out and saying, look, we actually need bipartisan support. We need people to support it from within the crypto industry and the banking industry to move forward with this. Otherwise, we're going to be stuck waiting until 2030 to get this thing done. So, partly Tether's audit, partly the Clarity Act and the frustrations of the crypto industry being heard through Brian Armstrong's pausing of support for the Clarity Act there, all impacted this 18 to 20% crash in Circle stock, and undoubtedly we'll be following this story as well. Let's go back into the newsletter here. Story number 4 this week. Objectively good news. Headline here is Mastercard, Worldpay, and Western Union named as Solana Developer Platform's first builders. Absolute giants. We've been talking about Mastercard for a while now. Western Union, of course, gave a very interesting speech at the Digital Asset Summit in New York, not yesterday, the day before. And the result of that was quite interesting. So Yano asked him, what is it that you're doing on Solana? Could you not have done it elsewhere? And he gave a rather interesting response. Zero indication of any sort of pay-fi innovation, giving back to crypto, improving the crypto industry. He said it makes us cheap. It makes it cheaper for us to operate. So that seems to be the main motivator for them coming on chain, if you will. It's a self-interested decision. I totally understand it. Finn, talk me through this SDP move. Is it enough? Are we going to see bigger institutions coming onto Solana?
First of all, I feel like Mastercard has been involved in every weekly recap for the past month or so. I feel like they're absolutely everywhere. So that's great to see, because obviously Mastercard has got millions, if not billions, of customers all over the world. So if they can, bring those people onto Solana in any way, shape, or form, that's definitely a positive. The SDP itself, the Solana Developer Platform, from what I understand, it's an AI-ready toolkit, which is powered entirely by APIs. It's broken down into 3 modules: an issuance module, a payments module, and a trading module that's expected to come later on this year. From what I understand, this is a completely it's a toolkit that is designed to help enterprises and institutions build meaningful apps on Solana. So it streamlines the process. I believe it makes it a lot easier for these teams like Mastercard, like Worldpay, to come on chain and start building apps without having to really dig their fingernails into the deep dark recesses of blockchain development. So I think it's exciting. I think if this can facilitate faster go-to-market for some of the biggest TradeFi businesses in the world, I think that's absolutely a net positive. There's been a lot of Solana side builders that have been involved in this. If you can scroll down, we've got a great image here. So, Triton, QuickNode, Alchemy, Helios, they're all there. And we've got a huge range of custody solutions, compliance, and on and off ramps. Over 20 partners have come forward to make this work on both sides of the stack. So I think it's very, very exciting. And I think it is going to open the door to greater adoption long term. I don't know who the next people are who are going to get shoulder tapped to start building with this, but I'm desperately looking forward to seeing what the likes of Mastercard are able to do with it in the next coming months.
But there is controversy, as always. As always, there is controversy. So we've been talking about this. Others have been very local about it. Finn, talk me through this next part of your article. Foundation at odds with ecosystem builders. I understand why people are frustrated. It feels to some that the foundation has sort of given up on supporting and funding and talking to and engaging with crypto native, Solana native builders and founders. On the other side of the argument, you also have a very reasonable position that people are taking, which is that, look, if you think about everything from January 2024 until today, there is a clear mandate for them to focus on institutional adoption. So with the very finite, very limited amount of time and energy and resources that foundation members have, if they've chosen to allocate those finite resources to onboarding institutions and doing that effectively and successfully, then again, they have a mandate to do so. So two strong sides of the argument there. But what's going on, Finn? Why are people shouting at each other feel like mommy and daddy are constantly arguing these days.
It does feel a bit that way. The foundation has caught a lot of flack in the past couple of weeks for a number of things. People saying they're rage baiting the community. Lily Liu came out and said that blockchain gaming is never coming back, and then obviously a whole lot of people got upset about that. On the other side, community members are saying that there's a bit too much smugness coming out of the Solana Foundation. They're starting to build products that compete directly with what ecosystem teams are building. I think this is probably a bit of an overreaction in general. The article here, there's actually a tweet from Mike Dudas that Mike Dudas has since deleted, I believe, as he regularly does, that said there's an odd tone coming out of the foundation, and they're perhaps not supporting builders as strongly as they generally would in the past. Kobe McGlashan, who's the co-founder of Bulk, says that it feels like Solana is currently having its Ethereum moment, denying reality while execution slowly leaves the chain. So look, there is a bit of a disconnect, I think, between what the foundation is doing to promote the chain and what the builders on chain are actually feeling as far as support goes. I think it's also, bear market realities. I think if prices were good, people would be finding other things to be talking about. And this is more a case of people looking to, throw ice cream at the walls and have a bit of a tantrum, more or less. Thomas, you're very deeply ingrained and probably in both sides of this. You're very much familiar with the institutional side, but you're also a degen at heart. What's your read on this?
We've lost TB. TB,
I'm back.
there.
I think he's back.
TB's back. We're so back. Okay, what's your take here, TB? We're sort of trying to square the circle of mommy and daddy always arguing, foundation doing what they're mandated to do, but then ecosystem builders are rightly confused and vocal about the lack of support and engagement that they're feeling because their finite resources are being allocated to onboarding institutions. How do we feel about this? What do the people on CT think? The spectators, the commentators, what are they saying?
I don't know, man. I mean, I feel like the communities are kind of getting left behind a little bit is what it seems like. But on the other hand, it's like, are you going to go after somebody that, stakes 100 Solana or somebody that's going to stake 1 million Solana? So I could understand the foundation, going for the bigger fish. It just kind of makes sense. But that's not kind of who helped build Solana and make it what it is, right? So I don't know. It's tricky. It's like, what do you want out of a foundation? I don't know what their role should be. And I mean, they come out with some spicy takes. They're definitely some rage baiting tweets, and they're getting the conversation going. I hope that we become better off from it, but it's definitely confusing at this point.
I think it's obviously to everyone's benefit if more capital and more users comes on chain. So if targeting institutions, targeting TradFi, and generally playing to that larger market is the path towards that happening, I struggle to find why people would be against it, right?
Well, TB covered this, part of the frustration in a video. I think it was early this week, late last week. And he said, at the end of the day, people don't want to feel like they're trading against institutions. That's not going to make people feel comfortable taking risk with their capital. So I guess that's another angle that justifies the frustration felt by the community as well. Having said that, we already know from what the Digital Asset Summit conclusion is that they're essentially coming on chain to reduce costs, not to trade against people. So again, so many different angles. But I tell you what, with the launch of tokens.xyz, with the attention that's being given to onboarding institutions rather than supporting community and sort of Solana native builders, people are definitely going to be making noise about this. So I suspect Foundation will come out in the coming days and say, look, of course we're here to support the community. Of course we're here to support Solana native builders and projects, and that's not going anywhere. So I can see a sort of a bit of a barbell strategy from them forming. I highly doubt Solana Foundation are just going to sort of hang up the coat and walk away and hang out with the likes of Mastercard for eternity. That would be very, very off character for them. So we'll be talking about this. I don't feel that the foundation is necessarily at odds with ecosystem builders. They just have a different set of priorities right now. And again, I feel like they have a mandate to onboard these institutions and and give that process the level of attention that it desires. But we will, of course, be talking about it. Before we get to our sixth story, before we get to our honorable mentions, before we get to our state of the Solana ecosystem in a tweet and the stat of the week, we are, of course, going to talk about story number 5, which is about DePIN. For a long time, we didn't talk about DePIN. Everyone was saying DePIN is dead. Everyone was saying DePIN is so 2024 and nothing is ever going to happen in DePIN. And it's sort of going to fizzle out and die. But we have remained faithful. We disagree. We think DePIN has room to grow. We think it has legs. The headline here is Solana DePIN protocols generate $2.4 million in February 2026 as growth shifts across sectors. This is quite interesting. There's a DePIN mobile, a Helium mobile angle here. There's a revenue angle here. There's a sort of revival movement angle here. So Finn, talk us through the story. Why are we talking about DePIN once again?
So the story came from the team at Syndica, who, as usual, puts out a fantastic deep dive research report on what's happening in Solana DePIN, and obviously they do a bunch of other reports in other areas. But I find their DePIN report is generally extremely informative and helpful. So one of the biggest takeaways from this is that Solana DePIN revenue is in a steady uptrend. In February, it dropped from the January's 2.6 million to 2.4 million. So perhaps a slight decline on monthly revenue growth, but at the same time, nothing goes up in a straight line forever. I think DePIN is really perhaps the realization of crypto moving beyond speculation to a degree. Instead of just trading meme coins and trading speculative assets on a decentralized chain, you're actually using distributed hardware to create real businesses. So obviously teams like Helium, teams like Hivemapper, Render, they're all contributing to that. And it proves that regardless of what happens in markets, they're still going to be driving cars, they're still going to be using their phones, and there's still a blockchain-based way to distribute that economic value. So regardless of what happens in markets, DePIN is going to keep soldiering on. Helium is performing really well in this. We can see they've continued to hit consistent revenue growth. XNet as well, which does a similar thing to Helium, they're also showing growth. But there are a few projects within this list that are showing revenue declines. So look, Helium and XNet doing really well, as we've said. But look, the data offloading is still going extremely well for Helium and XNet. Thomas, we've gone over to you over in the US for a take on current Helium vibes, current Helium services. Are you still DePIN pilled at this time?
I am. So I've got 2 Helium plans right now as we speak. And so it's my main lines. And I mean, it's a fantastic product, right? Like it uses major carriers when you don't have like a local miner that you're connected to. So it's just the same as having a normal phone plan, but there's like crypto aspects to it. I think that DePIN's like one of the most interesting parts of crypto. And it seems like Helium is, I don't know, they've changed their tokenomics around a lot and they've changed their incentives around. And I think that they're actually kind of on the right track. I think that they have a ton of adoption. They're growing Mexico and Brazil, I believe. And I think that they're kind of alleviating a lot of the sell pressure at this point, right? I think that I spoke about it before, but anytime I look at any of these protocols, you look at it, on the macro side, what's it doing? But then you can also look at like, all right, what's the microeconomics of it? And it used to be, you mine Helium tokens with your phone and then you sell it to pay for your plan. So everybody that was mining the tokens would just sell them right away. So it's no wonder that the token went from $9 to like $1 now. But I think they switched it around, and I think that they're getting a lot of revenue now. So I don't know. I was looking into the Helium token just the other day, wondering if like, is this the time to buy in? Because it is one of the most interesting projects in crypto, right? Like it's being used very well. Miners are getting incentivized pretty well. So I don't know. I'm bullish. It's a use of crypto that is easy to talk about, and I think that there's just a lot of potential there. I hope it keeps growing. I mean, I'm definitely going to follow it.
Yeah, and I think the ceiling on DePIN is only getting higher. So last year we saw the SEC issued no action letters to 00 and Fuse Energy, basically saying that the economic flows are not going to be targeted by SEC or federal lawsuits in the future. Hopefully, that gives people a lot of operational clarity. That means they can pursue these creative business models using blockchain rails. So look, I think it's DePIN, despite having been around for a few years, it's still in its infancy, and I think there's still a lot that can be done with it. Even the World Economic Forum, I think, predicted that DePIN could reach a $3.5 trillion market cap by 2028. So whether you buy into that or not, whether you think that the people at the World Economic Forum are perhaps uninformed, that doesn't matter. Look, the ceiling is very high for DePIN moving forward. Jack, there's been a few more raises around DePIN recently, have there not?
There has. Fuse Energy, 70 million, right? Dawn, 13 million. So it's clearly not just the World Economic Forum and their $3.5 trillion projection by 2028 that's driving this. I mean, the more cynical among us would probably say, look, the World Economic Forum just hire a bunch of think tanks and consulting firms, and they come back with these big $1 trillion figures, and then it gets posted somewhere, and then everyone's quoting it. There may be an element of truth to that. I wonder to what extent the smartest and brightest of the World Economic Forum are focusing on growth potential in DePIN. But clearly, VCs, investors have all done their due diligence on these teams like Dawn and Fuse Energy. And the valuations are going up. The investment is flowing into DePIN. As TB mentioned there, it is an understandable aspect, an understandable vertical of crypto. And I think it creates an opportunity for a great flywheel, as we've seen with Helium there. Use the token incentives, use the crypto elements to grow rapidly in your home country, perhaps expand to a new market like Mexico, expand to an even bigger market like Brazil. And then, Bob's your uncle, you've got essentially a functioning business model, and you don't necessarily have to alienate your original user group either. So while that 3.5 trillion figure might be lofty at the moment, might seem lofty at the moment, given where we are, what is it, $2.4 trillion right now, the entire crypto market cap. So yeah, within, let's say, less than 2 years for DePIN alone to eclipse that seems, again, like it was written by a think tank or a consulting firm. But it's not impossible. It's not impossible if you listen to the likes of Raoul Pal, who argue that out of nowhere, we're going to basically grow to $10 trillion. It is entirely possible that close to, 35% at that point would be dominated by DePIN. Let's see if we get there in 2028. I'm a little bit skeptical. Maybe 2035 is a more reasonable time horizon. Story number 6, the moment all the stakers have been waiting for. This is a story about Marinade Finance. So I think it's safe to say that the chefs have certainly been cooking. Marinade launches USDC lending vault in collaboration with Rockaway X and Camino is the headline. So Finn, they've launched a USDC vault here. Users can earn up to 6% APY, which is quite delicious, particularly considering the sort of state of limbo that people are feeling around this Clarity Act this week. Walk me through the story.
Right, so Marinade, obviously best known for optimizing Sol staking rewards over many, many years, one of the true ecosystem OGs. They're applying that knowledge also to USDC. So not only can you, stake your Sol with Marinade, but you can also deposit your USDC in a Marinade vault. They're targeting 4 to 6% APY. This is all built on Camino's infrastructure, and the capital itself is managed by Rockaway X. So Rockaway X, obviously one of the original Solana investors as well, and they've obviously also made some excellent other investments in the past. So Rockaway X is going to be deploying this capital across a range of lending markets and in yield-bearing RWAs. Notably, and I think this is what's quite cool about this, is that Rockaway X, while they are managing the money, they're not actually in charge of it, in the sense that Marinade still has full control over the vault itself. Rockaway X can't withdraw any money from that vault. They can only allocate it into separate lending pools. So, you're depositing into a Marinade vault. Marinade is the only ones who can control that. Rockaway X is not able to remove money from that vault in any capacity, so you can rest assured that's still safe. Marinade says that probably when people try and off-ramp their staked Sol, they lose about 1 to 2% of their capital, just off-ramping, trading to fiat, going through all those processes. What the goal here that Marinade is trying to do is that you can unstake your Sol, you can move it into USDC, and you can just park that within the Marinade ecosystem. You can continue earning yield on that, regardless of what Sol is doing market-wise. So I think it's a very necessary tool that they've built in. That unstake goes straight from Marinade to the vault as well, so it's not like you have to fiddle around with different tabs and different apps. From what I understand, it's a pretty smooth process. It's It's good for Marinade. I think it's good for people who want yield on their USDC. They're targeting 4 to 6%. I think it's probably hovering around 4% now. I checked earlier in the day. And yeah, look, if people can earn yield on their stable coins while they're waiting for Sol to stop going down, that's a benefit.
Yeah, I think it's smart. You know, I think there's something like 75% of their unstakers are moving to USD anyways, right? So you're losing that capital. Why not have a place to actually capture that capital in a USDC vault? Something that I would like to see is like the ability to have limit orders in there, you know, like make a little, get a little yield and wait, you know, until Solana hits your mark and then execute an order, and then you're getting staked on there too. I think that would be cool. But that would be a dream. And, you know, it's kind of funny because it seems like the government's trying to take away our yield based on our stables, but Marinade's given us some yield. So I like this.
Yeah, that's one of the kind of lingering things with me about the stablecoin Clarity Act. And, you know, I don't want to go back on it too much, but it seems like there's a lot of queries where they don't want people earning passive yield on their stable coins, but there's so many opportunities in DeFi where you can, you know, deposit or deploy and make up that yield anyway. So if you think that Clarity would be the end of the world, it probably just means that you're actually lazy and you haven't really explored all the opportunities available on chain. Jack, yeah. What's your take?
I'm going to strongly agree with that statement there. And I would argue that part of the reason why Brian Armstrong is coming out against this is because he doesn't want the banks to win. He's been sort of the spearhead of this crypto versus banks argument. And a lot of people focus on the headlines. At the end of the day, if somebody comes out and says banks won or crypto won, capital is blindly going to follow that. And it's just sort of a stamp of approval for the crypto industry if we can come out and say we got exactly what we wanted. But that was never going to happen, right? It was always going to be sort of a compromise. Middle ground was going to be found as far as stablecoin yield goes. I think the fact that you can't just hold stables on chain, you know, in a wallet, be super passive about it and get yield. I think it's, I don't want to say reasonable, but it was to be expected. And as you said, if people have any interest in coming on chain, they should actually deploy that capital, right? It shouldn't just be sitting idle, because then what's the difference? You might as well just get a bunch of cash and, you know, put it under your mattress. You're still getting wrecked by inflation at that point. So there's the good, the bad, the ugly. I don't want banks to be able to influence what happens with crypto legislation, but obviously they are able to, and they are willing, and they are going to, right? So there's no getting around that. Now, Solana stablecoin supply, as you know, did hit an all-time high of $17.9 billion. That's great. Of course, it fluctuates, it goes up, it goes down. But at the end of the day, that is a sign of maturity. People are not fleeing the on-chain world when markets implode. You know, in the past, it would be very clear when stablecoins would sort of go rushing off-chain. People would take their money and put it in a savings account, in a traditional you know, brokerage account at the end of every cycle. We're not seeing that anymore. And I think what ties into this sort of argument of we have matured as an industry is that people can now not just put their stables to work very easily. They can also buy, they can get access to on-chain commodities, on-chain equities. They can trade perps with leverage. They don't have to run away with their stables at the end of every cycle. And I think that's really, really good. It's a sign of maturity. And regardless of what the sort of end state of these headlines is, crypto won or banks won, at the end of the day, people are going to see that crypto is maturing, and we're not seeing these 70-80% stable coin volume swings anymore. And I think that's good. People are going to park their stables on chain, whether we like it or not. It is happening. Any final thoughts on the stablecoin situation before we move on to our honorable mentions?
I got one more. So, okay, I think these banks are in for like a rough couple of years, no matter what way you look at it, right? Like traditional banks, their model of not offering any money for savings accounts, like no yield, it's like it's being attacked by stable coins, yes, but it's also new banks. Like Robinhood right now is offering a full new bank account, and if you sign up, it's 4.5% yield, right? Like they're being attacked by, you know, new banks and stable coins. So it's like they're holding out wherever they can at this point is the way that I'm viewing it.
It's true, and they've become an extractive force for many people. I think if you're a business, then clear benefits. If you're an individual parking your fiat currencies in a savings account, then yeah, you could argue that you're getting milked more than you're getting in return there. And I think people are making that argument, certainly since the 2008, 2009 period where we had the global financial meltdown. And, maybe it's all coming home to roost at the moment. So let's see how that plays out. This chart, I think, that you've shared here from Artemis Fin is really, really good. It shows the ups, the downs, and hopefully we're not going to have massive downs anymore because people can put their money on chain, put it to work, use perps staking, so on and so forth, liquid staking, and I think we're moving overall in the right direction. Now, the final part of Finn's newsletter is always my favorite because we get a little quick fire rundown of what else has been happening in the Solana ecosystem, but also what else has been happening across crypto that we should be aware of. So let's dive into these honorable mentions. Finn, are you ready for a quick fire round?
Let's take it away. So we're coming in at the top. We have Solana enables support for Stripe and Tempo's machine payments protocol. Tempo is a blockchain incubated by Stripe. It launched last week. They have published an open standard for agentic payments, and that is now running on Solana. So that's very exciting. Solana spot DEX volumes, 8 pounds to Kraken, Coinbase, and Bybit. Still haven't stolen the crown from Binance, but we're well on our way. Otherwise, Orca launches vaults, automated liquidity strategies powered by Camino. Quite similar to the Marinade option we mentioned earlier. You can deposit liquidity. It gets managed by the professionals, and they generate some yield for you. Fantastic stuff. Colosseum announces the next hackathon frontier, which is going to start April 6th. Loopscale introduces Prism, a permissioned RWA instant settlement market. Play Solana launches the game DApp store on PSG1. Quite well timed, given that the foundation president Lily Liu said the other day that blockchain gaming was dead and never coming back. So Play Solana is fighting their fight and really planting their flag in that. Mayan launches its V2 bridge, claiming 5 times faster transfers. Camino leads all apps across all chains and RWA deposits, absolutely massive. And the New York Stock Exchange partners with Securitize to launch a 24/7 tokenized securities platform. That hasn't been made public yet, but it's in the works, I believe. And I think that's going to really create some interesting dynamics with the on-chain tokenized stock sector, where obviously we have 24/7 trading already. Let's talk favorites. Jack, I'm going to go to you first. What is standing out to you amongst all these?
I think because we've been so focused on, this mummy and daddy are arguing situation, people in the ecosystem getting frustrated at the decisions that are being made at a foundation level, I'm going to focus on Play Solana this week and the fact that they're launching, they have launched their DApp store. As you said, it's perfect timing. Whether or not it was intentional, I'm not so sure, but shout out to the guys at Play Solana. If you do want to get more information about PSG1, the console itself, it's a brilliantly designed device. You can go to YouTube and check out our unboxing and our testing of it. I play around with it sometimes. The missus shouts at me and, she's like, you're in your 30s. What are you doing here? But that's going to be my favorite for this week. TB, what do we got?
I am liking this MPP. So agents on Solana. I think that this is exciting. I think that, agent-to-agent payments are going to be up only. And that's what I'm going to be focusing on for my next video series. So I'm looking forward to actually using it, diving into it, and hopefully putting out a good tutorial on how to do it.
Love to see it.
Excellent. Let's move on to stat of the week. This is that chart that we were showing within the article earlier. Talk me through it, Finn.
Yep. So I love this chart. Obviously, we all see 1,000 charts every week. This is the one that's really stood out to me the most. So if we go back to 2021, one of the most blisteringly volatile bull runs we've ever seen. Sol absolutely skyrocketed to $250 and fell down basically just as fast. Throughout that time, the stablecoin supply on the network didn't actually change that much. From the time that we dropped from 250 down to 30, there was zero change in stablecoin adoption and usage on the network. When FTX went under, we did take a bit of a hit in terms of stablecoin supply. Sol dropped to $8. It was bad, dark days. People said we were never going to come back. And through this cycle, stablecoin growth has been very, very strong. Obviously, we have this massive jump up around June, in June last year. But the most important thing I think here is that from the top, Solana dropped once again from about 250 down to where it is now, around $80. But unlike in the past, stablecoin supply has continued growing. So people are trading out of speculative assets. They're going into stablecoins on chain. The trend is going to continue rising, I believe. And regardless of whether Sol is at all-time high or all-time low, people are going to continue using stablecoins on chain. So really, really good stat. It tells a lot about the maturity of the industry and where we're going. So yeah, well done to everyone on Solana for continuing to use your capital on chain instead of pulling it off chain, the first sign of chaos.
Absolutely a sign of maturity. Now, let's move over to the state of Solana in a tweet. What do we have here? Some juicy comments from Chase. What is this?
So, state of Solana in a tweet today, we've got Justin Knox from Jito. This is in response to Chase's Perps think piece, which you should absolutely go and read. It's brilliant. Justin says, makers follow flow, flow follows product, product follows builders. Solana needs this, and we have the builders to do it. Why hasn't it happened yet? Very easy question, very complicated answer. Obviously, a lot of stuff happening behind the scenes on Perps. Obviously, everyone is very, very excited for these new Perps decks like Bulk, like Phoenix, like Bullet to go to market and show us what they've been working on for all these years. Perps is the missing link on Solana. It's probably the one field and sector in which we are trailing other chains. So I think once we tick that box and we become hyper competitive in that field, there's no stopping Solana from there.
We are going to be talking about Perps for a while. We've been talking about Perps, and as you mentioned, Finn, it is the missing link. We'll have a video going out that's sort of a deep dive on Solana versus Hyperliquid and Perps and trading and all the rest. I think we have 2 videos going out actually, so go and check those out on YouTube. And if you haven't already done so, then read this article by Chase. I think it sets the scene perfectly. There's some good stats in there, some shocking stats, some eye-opening numbers. So it's worth understanding what it is that we're missing and what it is that's sort of being worked on at a foundational level, at a technology level, and of course where we are going, which is the founding vision of Solana, right? The NASDAQ on chain. In order to realize that vision, there's a lot of technological developments that are being worked on. So this is going to be part of the conversation, part of the discussion for the coming weeks. TB, you recently put out a video on this. What's your sort of core takeaway on Perps? Are we working hard enough? Is it too little, too late? What's your takeaway?
Yeah, I mean, it's just been tough, right? I shared in those videos, my personal experience. A lot of the Perps early on Solana, had some issues, right? Execution wasn't necessarily the best. Liquidity wasn't always there. Did they list the latest tokens always? No. So, we have quite a bit of catching up to do. And there's like some urgency being put on that now, right? We're being pushed the right direction. And I mean, when it comes down to it, it's like I've used Hyperliquid before. I'd rather not, right? Like I'd rather use a Perps dex on Solana. And I think that there's a lot of people that are in that same boat, right? People have capital on Solana. You see the amount of stables that they have. You see the amount of volume on Solana. So it's like, people have their money on Solana and they will eventually want to use a Perps dex. But I mean, Hyperliquid got a bunch of things right. Like they got the community part right. They onboarded the institutions. They did the right airdrop to the right people. So, to combat that and to come back now, it's an uphill battle, right? It's not going to be easy. So for there to be this many teams, coming for it makes sense. And that's what it's going to take, right? It's like a full-on attack on how do we do this? And, first of all, take a look in the mirror and say, hey, why aren't we there? And there was some technical difficulties, right? So, I think we're getting over the technical difficulties. And I think that a lot of the latest platforms are really good, right? Like you can use a Perps platform on Solana right now, and it's good. Are they all, fantastic? Is it every single coin I want to trade on there? Yeah, I don't know, probably not. But, we're definitely getting there. And overall, I think I'm excited for it. I think, it's tough because like I always say, like, don't use a bunch of leverage. It's, you're probably going to get wrecked and liquidated if you do, but it's what people want, right? So it's one of the proven product market fits of crypto is Perps. Right. So for us to not have that on Solana doesn't make sense. We need to get it.
Definitely. I do want to just end by saying we are certainly getting there. We're not there yet. As you mentioned, we brought up a comment here on screen saying this was a while ago, but one of the Perps dexes had, to your point, TB, some technical issues with it. We're no longer there. We've made massive progress, but there is still a lot of progress to be made. And again, if you want more information about that, you can go to youtube.com/SolanaFloor, and we have some interesting deep dives for you there. Ladies and gents, that is everything we have for you this week. If you want Finn's newsletter in full with some deep analysis, all of his spicy takes, it is on the nose. Go to SolanaFloor.com, subscribe to his newsletter. It's free, absolutely worth your time. You will learn a lot, I promise you. It's my favorite newsletter. And of course, don't forget to subscribe to SolanaFloor's YouTube channel for the big picture episodes coming up every Thursday from 11 a.m. Eastern time. We're going to break down the macro, the regulation, the policy, the politics, the truth socials, the tweets, everything coming out of the White House, the political risk, and really sort of get to the bottom of how it's all shaping crypto going forward. And again, what's really moving the markets. And with that, ladies and gents, thank you very much for tuning in. TB FM, thank you very much, guys, as well. Have a great weekend, and I'll see you on Monday.